Maybe I should call you Laser Eyes, Tom Lee. You still got those in your Twitter profile. So tell us, has your long-term thesis on cryptocurrencies, has that changed over the last few weeks? Where are you?
It hasn't. I mean, Bitcoin volatility is sort of systematic to the network itself. So I think anybody who buys Bitcoin has to be aware it's always going to be hyper volatile. That's the opportunity, you know, and that's why people call it diamond hands. I think the real to investors to crypto, especially coming through app, you know, the Robinhood platform, et cetera, may not have been attracted to the technology or to the sound money arguments. And that's why this is essentially a bit of a wake-up call for those, because I think when you look at where the selling's taken place, it's not from original holders of Bitcoin, but it's a lot of new accounts.
Mm-hmm. Are you referring to the institutions then? And we heard this from another guest last week, that they're not really true believers. They were looking to partake in sort of this momentum, but they aren't necessarily believers in the back-end technology. Is that what you're referring to, Tom?
Yeah, and, you know, institution casts a really wide net, because, you know, there's family offices and there's hedge funds and CTAs and there's machines, especially now that there's liquid futures. I think a lot of institutional money does trade momentum. They've got stops, and they also arbitrage liquidity. So I think if I was a machine, what I would have taken advantage of is the amount of leverage there was in the retail accounts and the amount of either volatility you need to create or downside pressure to actually create liquidation. So, I mean, I think machines were playing it on the short side, on the institutional side. A lot of them covered, and I think that's why crypto is levitating this week.
Tom, how do you think cryptos, and, you know, I'm lumping Bitcoin in there. I know that there's a lot of diversity within crypto. How do you think cryptos perform in a down market? And you know the kind I'm talking about, when there's not a lot of day trading going on, you know, individuals are out of the game, stocks are unpopular, people turn to things like real estate. I mean, does all of crypto get liquidated under a scenario like that and revalued? What should people prepare for?
John, absolutely. On a risk-off market, just like March 2020, crypto doesn't survive that, because liquidity is being withdrawn and people need to raise cash, and they might have margin calls in their fiat side. But that doesn't make crypto unattractive. It's the same reason people say stocks never underperform bonds over a 20-year period. You know, you have to wait 20 years for stocks to beat bonds. In crypto and Bitcoin, you never really had to own Bitcoin more than 24 months to actually never lose money. So I think Bitcoin is hyper volatile. That's the nature of it, but that's what creates the reward for people. And again, even though Bitcoin is in the penalty box now, I still think it can exit the year over 100,000.